Welcome back to West Coast Media Solutions. I know that a lot of folks are getting squeezed as this um, severe economic downfall is continuing to take shape and form. Although we've got constantly Janet Yellen from the Treasury, claiming that we're not in a recession. But if you ask the average person, they will unequivocally say that we are definitely in a recession. So, with that being said, I know that it's real tough for a lot of us out here in these economic streets, and therefore, with the banks, continuously tightening and banks collapsing. Um, and things of that nature, it's becoming more and more difficult to try to make ends meet. And so I wanted to just show you guys another possible alternative if you do need to borrow some money and your credit is not the best, um, or in things like that, and so you're not able to go to one of the traditional banks and get a loan or anything like that, especially with them, continuously tightening their lending policies. We've had some big banks and just flat out announced that they are getting out of the lending game in terms of home equity lines of credit, like I think Wells Fargo and potentially Chase. And then you've got the other issue of some of those big banks, Wells Fargo, Chase, Bank of America, Citigroup, and the like. They are having to pay out huge fines. I believe I read an article earlier on, I think it was on Yahoo Finance, where they have settled and going to be paying out, I think, a total of like $8.9 billion in fines and penalties that the federal government has slapped them with for wrongdoings with creating fake accounts and all kinds of nefarious things. On top of with some of those big banks earlier this year that collapsed, that we've all heard about, and the collapse is continuing. Although they are not really saying a whole lot, they're not really, the mainstream media is not really publicizing it too much, but it is continuing. Banks are continuing to collapse or tighten their lending practices. You also have the insurance companies that are also collapsing. 2 years ago, a bunch of insurance companies left my state in here in Louisiana, forcing a lot of us to have to seek other alternatives for homeowners insurance. And so, and the lenders that are the insurance companies that are left, their rates were significantly higher. For instance, I was paying less than $900 a year, and now I'm paying almost over two and a half times that amount. So, well over $2,000 a year. So, it's definitely a recession. Things are definitely getting tighter and tighter and tighter. It's like a noose around our necks. So, with that being said, I wanted to just go over again. I think I've already talked about this with M1 Finance and the ability to borrow, and you don't need to, there's no credit check or anything like that. But I just wanted to break down further how it exactly works. And so basically, um, you would need to have an investment account with them in order to be able to have something to borrow against. And it's called borrowing on margin, is basically what it is. But if you already are doing investing, say like with Ameritrade or any of that type of thing, then it's no different basically from having an account with Ameritrade or TD Waterhouse, or some of those other well-known brokers. M1 is just happens to be another one, and then they are all online. So basically, how it works is you have to have create an investment account with them. You pick your own stocks and EFTs and things like that that you want to start investing in, and you'll buy fractional shares basically. So you can, start with as little as $5 a week if you want. Of course, if you start that low, it's going to take you quite a while to build up any sizable nest egg. But at any rate, you can start basically with any amount. And then once your account is at least $2,000, their threshold used to be higher than that. You used to have at least, I think it was 5,000 in your brokerage account invested, but now they've lowered it down to $2,000. And so once you have at least $2,000 in your brokerage account, you will have the ability to borrow up to 40% of that. Now, there's a few caveats to that. Okay. So um, basically, you have to look at what your maintenance requirement is for those investments. So, like if you're whatever stocks that you're invested in, whatever EFTs that you're invested in, they all have different maintenance requirements. Some stocks only require that you have maintain at least a 25% invested in that asset. And then I've seen some on here that require 100%. The more riskier stocks and EFTs are going to require a higher maintenance or margin that you have to maintain in that particular asset. So anywhere from 25 to 100%. There's a lot that's only 25. There's some that's 45. I've seen some that's 70. Well, um, you have at least $2,000 invested in your brokerage account, and you want to do 40%. So what you would need to do is you take that 2,000 times 40%. That's going to be $800. But that doesn't necessarily mean you're going to be able to borrow $800, because you have to, let's say all of the things that you're invested in, all the stocks and EFTs that you're invested in have a 25% maintenance requirement that you have to leave in the investment. So you're going to do 2,000 times 25%, and that's $500. Okay. So the way it would work is that um, M1 is going to allow you to borrow the less of the two. So the less of the two, the 800, that's just straight 40% of your 2,000 versus the 25% is 500. So the max you're going to be able to borrow in that scenario is going to be 500. Okay. Um, So just keep that in mind. And then you also want to keep an eye on within the app your uh, credit status slash risk ratio. Because what'll happen is if your account, uh, if your as your stocks are going up and down and your EFTs are going up and down, it could, you know, put your account at risk to where they would need to sell some of your assets in order to recover the amount that you borrowed against your assets. And so that's how that works. So all you got to do is just log in, every so often, maybe once a day or whatever. And just make sure you're still in the green here, and it looks just like what you see here on the screen. This is what it will look like, and it will show you um, how much interest has accrued, how much you've repaid back. You'll be able to see that, your credit limit, In this example up here, the person had, you know, $20,000 invested, and they've got a credit limit, or yeah, they've got no, that's how much they borrowed. They borrowed 20,000. Their credit available is 27,100. Their credit limit was $47,100. So they have a pretty significant amount in their in one account in this example. And right now you're looking at it an interest rate of 7.25, and that's because of the Fed's increasing the rate, the overnight bank rate, over the last 6 months or so. Prior to the Feds increasing the rates, it was very, very cheap to borrow on margin with M1. The rates were down in the fours, 3s and 4%, even lower than that at one point in time. But 7.25 may seem high, but this is still better than what credit card. Those are going to be, double digits, probably 25 to 35% or something like that. So it's still much, much better. And this way your money is still staying working in the market for you. So you don't have to sell your stocks. You're not selling your stocks to get the cash that you need. You're actually borrowing against it. So what happens is, let's say you borrow, you know, let's say you had enough in there to where you could borrow $2,000. So what would happen is M1 basically loans you the money. So they credit your account $2,000 of whatever amount that you borrow. That's what they're going to credit your account with, and then charge you 7.25 interest right now. And then you can. There's no set payment or anything like that. You can pay back as little or as much as you want each day, each week, whatever. And So that's how that works, which is, I think that's great. This just to give you an idea of how it compares to other brokerages out there. Like I said, like E-Trade, Fidelity, Charles Schwab, Ameritrade. They do margin loans as well, but look at the rates. They're almost double of what M1 is charging. Okay. And then as far as fees, there's no management fees to be able to do this. Most of the competitors, most of them, they do charge fees as well. So, here's just another option, that I wanted to make you guys aware of. If you do need to borrow some money for, an emergency or something like that before you sell your stocks, which I've done this multiple times, and I could just kick myself because several times I ended up just selling my stocks and taking the money. And I wish, looking back, I wish I wouldn't have done that, because I'd have a lot more in my investment account with M1 if I had not have just, cashed out and sold um, my investments. But anyways, you live and you learn. And I felt at the time that it was a few things I had to do. So it is what it is. But right now I'm, working to, rebuild my M1 account so that I can be able to use it as leverage to pay down other higher interest rate debts. And it's not like I have a whole lot, but I do want to be able to use it for that. So that's another strategy. So that you might want to look at is trying to build up your M1 investment account as much as you can, and then borrow against it to pay off say, you got a high interest rate car loan or something like that, you could stack your money to where your money is making money for you by investing in dividend paying stocks and dividend paying EFTs. And then once you have enough in there to borrow against, then turn around and pay off. Let's say you got a $500 a month, car loan or something like that. You can turn around and pay that off, have your title for your car, which is going to help lower your car insurance. When you don't have a loan on your car, then that helps to lower your car insurance. And then you can turn around and the money that you was using to pay your car payment, take that money and then pay back your M1, account. And all the same at the same time, your investments are growing. So, to me, it's a win-win situation that you can create for yourself. But anyways, just wanted to share that with you guys. Until next time, if you have any questions or whatever, feel free to hit me up in the comments. But make sure you share and like the video. And also, if you don't have an M1 account, I'm going to put my referral link down in the comments, and it'll also be in the description. It doesn't hurt you at all to use my link. You'll actually, I think they're giving like $10, $25 or something like that for opening up an account with them. And then I think I get $10 or whatever it is, whatever the little incentive is. Either way, it doesn't hurt you at all. It doesn't change things for you at all. So, it's a win-win, and I would appreciate the referral. All right. So until next time, wish you guys the best of luck out there, and just, do what you can to try to keep your head up, because that's what I'm doing.